start now. I just wanted to wait till everybody come in because as I was talking, there was people like joining, so I'm just gonna wait till people flood in. I hope you guys have your wine. I have mine, of course. Everyone knows I love wine. And I have this, it's called Rico and it's Mango Moscato. And it's really good. So, if you need some wine tips, that's it. So I really just wanted to pretty much create this live just so that I can give some insight on what your credit score needs to be like if you're looking to purchase a house. The first thing you want to do is you definitely want to make sure that you know your credit score. If you don't know your credit score, then when you go to a lender, let's say for instance you come to me, a real estate agent, you say, I want to buy a house. I want to buy a house. The first thing I'm going to ask is, cool, what's your credit score? Can you qualify? So you definitely want to make sure you are aware of what your credit score is. If you don't, you're going to find out really soon, and it may put like some hindrance in like your steps to buy a house. So find out your credit score. The ways that you can find out your credit score is you can, obviously they have Credit Karma. It is a free app, but I don't really, well, you can use it, but it's not a secure way to check your credit. It's just showing your Vantage scores. What you want to find out is your FICO scores, and that's the scores that the lender is going to use in order to qualify you. They're not going to be using your Vantage scores. They're going to be using your FICO scores. So you definitely want to check out your credit from credible source, kind of like Experian. Experian have like, I was just on my credit, checking my credit. Pretty much you can check your credit report for free. But I believe when it comes to your scores, you have to subscribe to them. And if you don't want to pay and subscribe to Experian, you can definitely check. Like if you have a credit card, most credit card companies, they offer you free credit check for free. So like for instance, I have a credit card with Chase. Chase offers me, they give me my credit report for free. So I don't have to pay for the Experian. I can check my credit score through Experian for free through them. So you definitely, if you have a credit card, you want to check with them first to see if you can look at your credit for free. And I wouldn't advise a credit card unless one, you're getting cash back from that credit card. Two, you have like a point system, maybe Amazon. I have an Amazon card where I accrue points. I can accrue points and I can use those points towards my Amazon purchases. So that's why I keep that credit card. I have another credit card with Citibank and I get cash back. So the more money I spend, the more money I get back. And I actually sometimes use the money that I get back towards my payment. So I wouldn't advise the credit cards unless it's a benefit to you. If you have to pay to have a credit card, I decide against it. I have a friend that have like a credit card where she can, it's American Express and it's through the airline. She can accrue points and she can get flying points. So it has to be a benefit to you, I would say. So stay away from credit cards unless there's some type of benefit to you. So where are we? Check your credit scores. Check with your credit card company. And then once you find out your credit scores, then at that point, you want to look at your report. The scores are great. You want to make sure the score is good too, but you want to look at the report. Because if you don't look at your report in details, there could be anything in that credit report that it could be stuff that you don't even recognize. So I definitely recommend that you look over your report and you make sure that any inquiries, any credit agency that's reporting on there, they're accurate and they're true. And if they're not, then you need to start disputing. What y'all drinking? Because I love this wine. So good. What else? Okay, check your credit report. And then once you check your credit report, you're definitely going to have to assess. If you look at your credit score and you don't have at least a 580, then of course you can't get into a house. But you want to check to see what's stopping me from getting my credit score up to the 580. Is it late payments? Is it credit utilization? You want to make sure when you're using your credit cards, your utilization is 30% and under of your total credit limit. And it's a combination of like all your credit cards. And you can have up to like $70,000 worth of credit with credit cards, but you definitely don't want to use $70,000. You want to at least, if you have $70,000, you want to be able to use, I would say $30,000 or less. It should be $30,000 or less because it's 30%. So utilize 30% or less of your credit, because if you overuse your credit card, you're going to see that your score is decreasing. So definitely don't overutilize them. Another thing that brings up your credit score is accounts. How long your accounts have been open. If you have a credit card, and even if you don't use it, I would keep that credit card open. And if you're at risk to losing that credit card because you barely use it, like me, I have some credit cards I barely use. So with that being said, that lender, they may close that account without me knowing. I would at least spend like every 6 months or so. It don't have to be a lot of money. It can be like $20. Maybe you use your credit card to get gas. Or maybe, for instance, you want to get takeout or food on the credit card. I would say use your credit card for small purchases, not huge purchases that you know that's going to bite you in the end when it comes back to pay it. Those small purchases here and there, you can pay that off in full. What else? Okay, so what else have I noticed? DTI 41% or less if you're going to qualify. And then when I send you to the lender, if you have a 580 credit score and you have money in your bank to prove that you can pay for your property inspections, your termite inspections, and your appraisal, you're going to be good to go. But if you have the credit score but you don't have money in your bank, the lender's not going to be able to qualify you either. So I would say if you know you're looking to buy a house, save at least. You want to do the down payment, which if you do have a down payment, you want to do 3.5%. So save for your down payment, which is 3.5%, and then save additional, because you're not just going to pay the down payment. You're going to have, like I said, those inspections, and you could have closing costs. That's something that's associated with purchasing a house, closing costs. That's the money that you have to use to pay the lender for doing the title search, transferring the deed from the seller's name to your name. It's just, you're going to have to pay closing costs. If you don't pay it, the seller may pay it, but it just depends on the market. Most of the times when I'm negotiating my contract, if it's no other offers on this house, I ask the seller to pay it, but don't depend on the seller paying your closing costs. Definitely save for the closing costs. Don't just say, oh, I got the down payment, now I'm ready to buy a house. No, you need to have the down payment and an additional, I would say an additional at least $2,000. No, not even two. An additional $4,000 just to have some cushion. So that way when you get into your house, you're not that broke. It's not like, oh, well, now I got to scramble to pay closing costs and blah, blah, blah. What else? Ways to bring up your credit score is they're definitely going to look at your income. So let's say, for instance, your debt to income ratio is over the 41% that is allowed. You want to add a cosigner, which that cosigner should be bringing more income to the loan. That cosigner should be a benefit to you. It shouldn't be the cosigner hurting you. You and the cosigner together should have more money so that you can qualify for a higher credit limit. And one, it won't affect your DTI numbers, if that makes sense. I don't know if it don't make sense, you can tell me at the end and then I can explain a little bit more. Another way that you can bring up your credit score is, let's say, for instance, your debt to income ratio, meaning your monthly bills that you have. The debt to income ratio is pretty much your monthly bills that you have that is in credit. So let's say, for instance, you have a car note. That's a monthly bill that you have in credit because you're financing. You didn't pay that cash. You're paying a bank for that car. What else? Another monthly income can be a credit card. Another one can be a mortgage. Let's say you already have that. Those are monthly incomes. That's what the lender counts as DTI. So if you are looking to lower your monthly incomes, another thing that you can do is look to refinance those existing loans you have. Let's say, for instance, you have a loan for a car note, and for instance, you're paying, I don't know, $500 on that car note. If you've had it for at least a year, try to refinance it to see if you can lower that payment. And I'm not saying going around and shop at 10, 12 banks and refinancing. don't do that, because that's definitely going to bring down your credit score. 2 banks is sufficient. At least shop around to 2 other banks and say, hey, I'm looking to refinance my car note, looking to buy a house, and I'm looking to eliminate my monthly bills. Or after you refinance, you can make extra payments. Like, for instance, like when we just got that stimulus check, if you wanted to use that money to drop an extra payment on that car note to pay it down faster, that's another way to do it after you refinance. I know a lot of people are scared. They say, I got student loans, I can't buy a house. That's not true. Just because you have student loans don't mean that you can't buy a house. It just depends on what status that student loan is in. Do you know what status your student loans are in? There's only about 3 statuses that your student loans can be in. It's like deferment, forbearance, and repayment. Deferment is like the status that they keep it in. Like, let's say, for instance, you're still in school, and even after you finish school, you have a 6-month period where they leave it in deferment. You can do a deferment for school. You can do a deferment for hardship. Let's say, for instance, you're finished school, but you can't start to pay on your student loans. That's deferment. Forbearance is like it's like a status that you're still in, yet you're in, but you're still accruing interest. So you're pretty much not paying your student loans, but you're accruing interest on it. And then the repayment is obviously you're repaying your student loans. So that's going to be very important as far as contributing to like your DTI too. Because if you are repaying your student loans, that's going to contribute to your DTI. That's what the lender is going to look at, and they're going to say, oh, well, Shy make $2,000 a month. Well, $500 of that money is going to her student loans. Another $5 is going to her car payment. So that way she only have $1,000 left, and that's not even including money for food and gas and, like just things that people need from their paycheck. So you need to take that in consideration. That's what they're looking at. They're looking at how much money is going towards your bills. And if you're adding a loan, obviously you're adding another bill. So they want to know that you're going to be a good buyer and you're going to be able to sustain this monthly payment. And just so that you know, the monthly payment, like the mortgage, let's say, for instance, you find a house for $100,000. And on Zillow, which everybody knows Zillow is not always accurate. On Zillow, it may show your monthly payment being like $600, $700. You're like, oh, I can afford a house. This house is only $600. That's not going to be your monthly payment. So Zillow is like catfishing you, telling you your monthly payment is going to be $600, but they're not taking into consideration the taxes. Taxes included in your mortgage. You're going to have insurance included in your mortgage. You're going to have your principal. I already said interest. And you're definitely going to have different taxes depending on the house that you like. You may like house A over here in the suburbs, and the taxes can be like really cheap or really high. Then you may like house B over here in no man's land, and then your taxes can be really low, so you don't really see a difference. All of that is going to be included in your mortgage. It's not just going to be, you're not just buying $100,000 house and you're just paying on that. No, you're paying on all of these things: principal, interest, taxes, and insurance also. You're going to realize when you start to home shop, before you close on your house, you're going to have to secure insurance, just because you're financing this house through a bank. So the bank isn't going to loan you a $100,000 loan on a house that you don't even have insurance on. So they definitely want to make sure they have that protection, because anything can happen. You can get robbed. It can be a fire. They want to make sure that they protect that investment. Everybody knows buying a house is an investment for you, but it's also an investment to the bank, because they're lending that money to you. It's not just free money. It's money that you're going to have to pay back. What else? Credit, co-borrow, pay off a debt. I think that's about it. That's all I have that comes to mind. What else do you want to know about home purchasing? Thank you, Lexi. Lexi's my best friend, y'all. Do y'all have any questions about like home buying and credit? And is there any like what those who don't own a house yet, even if you do own a house, what comes to your mind and you're just like, I really want a house, but I'm not confident on blah blah blah. What's some things that's really making any of you guys scared about going out and purchasing a house? I'll look at them, but I'll keep talking. As far as reaching out, let's say, for instance, you say, I want to buy a house. So you go on Zillow, you start looking at all these houses, saving them. Like, that's my dream house. That's the house I want. That's the house I want. None of that really matters. Yes, it gives you an idea of what you like in a house and what you don't like. So when you start shopping, it's like, okay, well, I want this in a house and I want that. But that's not really helping you. The first thing you want to do when you get it in your mind, I want to buy a house, is talk with the lender. And the reason why I say that is the lender has that ability to pre-qualify you. I mean, me as your real estate agent, I'm going to help you find the house, but I'm going to want you to get pre-qualified too. I can't pre-qualify you. So even if you're not pre-qualified, I'm sending you to the lender. I'm going to send you to the lender. What's the best place to search for a home? Sites or otherwise. Oh, okay. So as far as searching for a house, Zillow is a good place to look, but it's not the best because it can be a house that's pending, but it shows active. The best place to look for a house is the MLS. That's the multiple listing services. It's pretty much your realtor. If you find a real estate agent, they have access to your local MLS. Every like city within a state have their own MLS. So I'm in Fayetteville MLS, and I also have access to Riley MLS. Those are two different MLSs within North Carolina. So you find a real estate agent, and I send people houses. I set them up on an email list based on, they tell me, Shy, I want 3-bedroom, 2 baths, 2-car garage, ranch style. Ranch is like no stairs, or I want a 2-story house. I'll start sending them houses based on what they tell me that they want. So you find a local real estate agent, and they can set you up on some listings. You can let them know, like, hey, I'm not ready to buy a house, and then they may inquire with you why, and then you can tell them why. But the best thing to do, if you know how to fix your credit, or if you know what you need to pay down, great. But your lender's going to know even better than you, because if let's say, for instance, you pre-qualify, they're going to pull your credit, they're going to look at your credit report, and they're going to be able to say, hey, Shy, you need to pay down this, and we can get you into a house within 6 months. So the lender can create a game plan for you to kind of, it's like motivation still, because they can say, pay down this credit card within 3 months, and that can be a goal that you can obtain within like 3 months or 2 months. I don't know. It's something to keep you going, and you know that you're working towards purchasing a house. Some people can't wake up one day and say, I want to purchase this house. There's steps to purchasing a house, and that's okay. But you need to know what those steps are, and that's where the professional comes in to play. I was on, what is it called? Experian today, and even Experian has a tool. Now, you may have to pay for it if you can't get it for free through your credit card company. They have a tool, whereas if you say, I want to pay off, I want my credit score to be, I don't know, maybe it's a 640. I want it to be a 650 within 3 months. They can tell you what to pay to get your credit score up too. And that's kind of what the lender do. But I looked on Experian and they do it. The lender will do it to you for free. I'm not doing it to you. They will help you for free, because in the end, you're going to go ahead and get your loan through them when you are ready. Now, if your credit score needs extensive work and you're not just, let's say, for instance, I told you that you need a 580 to get into a house here in North Carolina. You need a 580 and your DTI needs to be below 41%. Let's say, for instance, you're at a 580, but your DTI is at 90%. You're not ready to buy a house unless your income proves that you can afford another bill, which is going to be your mortgage. Where was I at? Let's say, for instance, you have a 580. Oh, okay. A lender can help you if you need to take 2 steps, 3 steps to get to purchasing a house. But if you need like extensive work on your credit, And that's okay if it's nothing wrong with needing work. Everybody live and they learn. And I learned about credit early just because my mom, she really put it in my head. So that's who I can give credit to for helping me learn about credit. And that's okay if you didn't have that opportunity or no one warned you about credit. And let's say, for instance, your credit is shot. You're not even close to 580. You're in the 450s. Then at that point, I would recommend you to a credit specialist because that's going to take a little bit more nurturing, grooming, and you're going to need to really raise your credit up to where it needs to be. I would say go to the lender if you need just a few tips here and there, but do not go to the lender if you have extensive credit. Well, you can go, and then they can still give you some insight, but I would still go to a professional credit repair specialist, and there is lots of credit repair specialists. I work closely with one. And if you're in North Carolina, I can refer you to her. Even if you're not in North Carolina, she can help you. And there's a notion that, like, if I don't want to buy a house in North Carolina, she can't help me. I can still help you. I can help you buy a house if you're located in freaking Wisconsin or Florida or Georgia. I can help you by referring you to another agent. And I can still be a part of the process. Like, for instance, my little cousin, she's wanting to buy a house. And she's like, I wish you can help me. And I told her, I was like, I referred her to a realtor in Philly, but I can still help you. I mean, I don't know, like, the market in Philly. I don't know, like, what that realtor knows the market and stuff, but I can still give her my professional opinion. Tomatoes, we all do the same thing. It just sometimes it's different little things that you do in each state and stuff like that. So, do you recommend using Barb's? What you're trying to say? So the best place to search for a house is going to be the MLS. In short answer, because I know I tend to go all over. So find a real estate agent that's within your town, or if you don't know where to look, contact me. Let me know where you live at, and I can find a real estate agent for you, and they can start setting you up on sending you houses directly from the multiple listing services. That's going to be the first place that a professional real estate agent, if it's not for sale by owner, a professional real estate agent list their house. They're not going to list it on Zillow first. They're going to list it in the MLS. Zillow get their information from our MLSs, just so that you know. Yeah. And if you're in North Carolina, I have a website, soldbyshifallon.com. So it's just my first and last name. You can definitely go on that website and you can look at houses all over North Carolina. Well, in the Raleigh, in the Triangle, and in the Fayetteville area. Not Charlotte. I don't have access to Charlotte MLS. Barbs, what are you trying to say? Does anybody else have, like, any questions about, like, credit? I'm trying to see if there's anything that I'm missing as far as credit. Oh, okay. I have another tip. So with credit card, so let's say, for instance, you got 20 credit cards and you're like, I'm overwhelmed. Where do I start? I would say start with the credit card with the high interest. And another tip, if you have a credit card company and they send you some checks in the mail that say 0 interest or 0 APR for X amount of months, take advantage of that. And sometimes you can transfer one of the balance. I'm not saying transfer all of the balance, because that's something the lender don't want to see. They don't want to see all of your debt transfer to one credit card. But if you have a credit card and it's offering you 0 APR for X amount of time, transfer one of your balances to that credit card, and that'll give you X amount of months to pay it off, especially if it's a high interest credit card, because you're going to be pretty much, that's like mopping the floor and then everybody going to go walk. It's kind of like you're doing double the work. You're paying more money for a debt that, I don't know, it's just high interest is like they're taking what you owe them and then some, like twice as much as what you owe them. So balance transfers are good if you're trying to pay down your debt. I do want to recommend something else as far as, like, let's say, for instance, you are an overspender. Me, I'm an overspender. And I spend on, like, and I think it's because, again, I'm going to blame my mom. she like tells me stuff like, oh, you can have whatever you want. So I put it in my mind, like, I don't like to not have what I want. I like to always have what I want. So I just spend. And I don't know how I do it, but I just do it. Like, I just say you only got one life to live. If you're like somebody like me that don't know how to budget, I feel like this budgeting tip can help you whether you make $100,000 a year or $30,000 a year. 50, 30, 20 rule. Now, this is going to be 50% of your money needs to go to your bills. Car payment, credit card, car payment, rent, and then everything else. 50% goes to your bill. 30% goes to your extra. Let's say, for instance, you really like, I don't know, shoes or clothes. You like to shop. Spend 30% of your check. So I didn't say it right. So 50, 30, 20, and that's just of your income, of each paycheck. So let's say, for instance, you make $2,000 a month. So if you make $2,000 per month, 50% should be going towards your bills. 30% goes to your extracurricular fun stuff. If you're like me and you love to shop, you'll spend it on an outfit or two. Or maybe you'll spend it on some hair. I like hair too. 30% goes towards that. And if you don't have all the money you need for that hair, you do not need to be buying it. Do not buy it. You need to take that 30% and save it so that you can get to your goal. And then 20% goes to your savings. So if you use that motto, I'm pretty sure you should be in a position to save for a house or get into a house. Now, I'm not saying that it's easy. It's not easy for anybody to budget. It's like a diet. Like, I suck at diets. Like, I started and I can't finish. And it's because you deprive yourself of the things that you're used to. But you just got to know. You got to put it in your mind that it's a sacrifice for a bigger investment. Like, buying a house is an investment. Your credit scores go up when you buy a house. You get discounts on, like, your insurance and stuff like that. Like, buying a house is definitely an investment. I can't wrap my head around why anyone would think paying rent or paying someone else's mortgage is better than paying your own mortgage. You can buy a house and have a mortgage of $900, $1,000 mortgage for a house, for a 4-bedroom, 2-bath house with a 2-car garage and a big old yard. And I am a living testimony to that. Yeah. So you definitely, I'm not saying that it's crazy that you don't want to buy a house, but I can't understand why anybody would not think buying a house is a major thing. I feel like everybody's goal should be to buy their own house. Because let's say, for instance, you buy a house. Yes, you have to pay a mortgage on that house, but let's say you live in that house for 3 to 4 years. You're bound to have some equity on that house. And when I say equity, I mean, like, equity is like good debt in your house. Not good debt, but it's like the plus in your house. So let's say, for instance, you buy a house for $100,000. Equity means your house is worth $130,000. So guess how much you're walking away with? Especially if if you're paying your mortgage down and your mortgage is less than $100,000, because that mortgage is going to go down every year. Every time you pay on that mortgage, that debt gets less. And if you take care of your house or if you invest in your house, your equity goes up. So when you go to sell your house in 3 to 4 years, you can walk away with $30,000 in your pocket. That's another down payment to your next house. Maybe your dream house or something. I had a client walk away with $9,000 in equity in their house. They paid, I think, $190 and their house appraised at $2 something. So buying a house is definitely an investment. If you can pay a car payment on a car and that car depreciates, you can pay a payment on that house. And guys, I'm only supposed to be on here for 30 minutes. But that's fine if it runs over. It's fine. I don't really care. But if once the topic goes down, then I'll stop if you guys don't have any questions. But yes, I feel like it should be everybody's goal to buy a house or buy land and build on it or whatever. It's definitely, I don't know if everybody believes this, but it's a form of like freedom and wealth. Like Like, you own something. You own something that land does not depreciate. And land, every one parcel of land is its own unique parcel. There's never going to be another house that, like how the house we have, it's never going to be another house. Like, every type of land or every parcel of land is unique to its own. So, your goal should be, sis, 2021, even if it's not 2020, to get in a house. And, yeah, it's a beautiful thing to have your own house and to know that you can possibly have equity in it. I barely drink my wine. The session is 1 hour. No, it was only for 30 minutes. Do you recommend checking your credit from Capital One Credit-Wise? I don't know. I've never heard of that. Barbs, do you have to pay for that? Do you have to pay for Credit-Wise? Hi, my love. I don't think it's a bad thing to. The only thing with Credit Karma, the one good thing about checking your credit with Credit Karma, even though the scores are not accurate and it's not the score that the lender look for, again, okay, well, if it's free, there's no bad thing about checking your credit. But you need to find out what scores are they tracking. If it's like Credit Karma or Credit-Wise, it may be a soft pull. Soft pulls are not hard pulls, obviously, so it don't show when you're checking your credit. So if it don't show when you're checking your credit and it's not a hard pull, continue. Just keep in mind, make sure you understand those scores may be different from when the lender pulls your scores. Because those scores could be the Vantage scores. The Vantage scores is just like the overview of your scores. It's not accurate. The lender pulls your FICO scores, and that's a hard inquiry. But Credit Karma and Credit-Wise, if they don't show up, they're soft pulls. And it's good to monitor your credit, whether it's with Experian or Credit-Wise. Just make sure that Credit-Wise is not hard pulling your credit every time you check it. And when the lender pulls your credit, it's going to hard pull your credit, but it's not going to really affect you. I tell all of my clients, even if it's a preferred lender I refer them to, you should shop around. When you first purchase in a house, yes, you can go with one lender, but I say shop around to at least 2 lenders. 2 lenders shouldn't look bad. If you're applying to those lenders within 30 days of each other, let's say, for instance, you applied to lender 1 on July 1st, and then you applied to lender 2 on July 5th. That's totally fine. But if you apply for lender 1 on July 1st, and then you go to lender 2 on August 1st, that's not good. You want to do it within 30 days because it's going to be, obviously your score is going to go down a little bit, but it should not drop drastically to the point where you won't qualify for a house anymore. And it's always good to have some leeway. Like I said, save your down payment if your down payment is 3.5%. But also save more than that, because you're going to have additional fees. You're going to have inspections you need to pay for. You're going to have appraisals, and you're going to have closing costs if the seller doesn't pay it. And I'm starting with credit. This is the very first step that you need to take care of, even before you contact a lender. If you contact a lender to show you a house and you do not have a pre-approval, you're wasting your time and that lender's time. And that real estate agent's time. Get your pre-approval before you go shopping for houses. That's like, I don't even know what to compare that to. I don't even know what to that's like you not preparing for it. Like, that's like going to the mall with no money and window shopping. And as real estate agents, we are very busy. Like today on my story, I said I had a new client that wanted me to show a house to her, but the house wound up being pending. Well, she wasn't pre-qualified. So guess what also happens without you being pre-qualified and talking to that lender? And the lender gives you your pre-qualification. You only can get that from your lender, by the way. Guess what happens when you try to go look at houses not being pre-qualified? You say, oh, I want to look at that house first before I get pre-qualified. No, sis, no. Because guess what? Somebody else who is pre-qualified is going to come and put an offer in that house, and it's going to be pending, and it's going to be off the market. So definitely, this is the first step. Credit is the first step. And credit is not as frustrating or as hard as everyone makes it seem. If you mess up, okay, so what? Start over. You can repair your credit. It's not end all be all just because your credit isn't where it needs to be. You just need to have that mindset to keep going. Keep going. Just because your credit isn't ready today doesn't mean it can't be ready in a year. Anything that's worth it is going to take time and effort. And that's for anything, relationships, credit. So don't get discouraged just because your credit isn't where you need to be. But if your credit is a 580 and your DTI is 41% or below, call me. If you're in North Carolina, if you're anywhere, because we can get you in a house. I also want to let you know the debt to income ratio is going to be your monthly credit expenses divided by your income. So let's say, for instance, you have a monthly credit income of, I don't know. Let's say you have a monthly income of, you have only one thing on credit, and it's your car, and it's $500, but you make $2,000 a month. Your DTI is 25%, so you will be good with purchasing a house. But if you have let's see, 900 divided by, I'm not good with math, by the way. Let's say, for instance, your income is $2,000 a month. Thanks, Leslie, babe. Let's say, for instance, your income is $900 per month, and your income is $2,000 per month, but your credit, the amount you're borrowing in credit is $900, and that's your car payment, and that's how much you pay with one credit card bill. That's 45%. Your DTI is 45%, and then we're not even including. We're not even including your rent. You're definitely, if you buy a house, you're gonna have to have rent. Pretty much, your rent is gonna have to be close to your mortgage. Like, your mortgage is gonna have to be similar to your rent. So when you buy a house, also consider. I always tell my clients this too. Let's say, for instance, you get pre-approved for $200,000. Just because the lender approves you for $200 does not mean you have to buy a $200,000 house. Let's say, for instance, you buy a $100,000 house. That means you qualified that you can pay for a $200,000 house, but you're buying a $100,000 house. That means you're living below your budget, and that's definitely an investment. This is what I mean by wealth building with purchasing a house. If you move smart with it, you can definitely build wealth. And I honestly believe that. So, I don't know. That's what I believe. And then if you are looking to buy your first house, and you just, let's say, for instance, you are buying it with the intentions on renting it out. Maybe you're like us, me and Sean. For some reason, he wanted to buy this house, and we live here, but we're going to be gone within the next couple of years. We purchased this house with the intentions on renting it out. So you definitely, if you're looking to buy a house as an investment, don't think about it like it's your house, because you're not your client, or you're not your renter. You are not your customer. So just because you want a $200,000 5-bedroom, 4-bedroom house, your renter may not want that. You can just get a 3-bed, 2 baths, and just get that, rent it out after you move, and make some money on it. That's what I would do. I think that's about it. That's all I have with credit. I hope this was beneficial to everyone. That's my goal, is to make sure that I educate and inspire. Like, what I know, I want to give off to people, and I want to inspire you to let you know that you can buy a house. You may not be ready today, like I said, but you can be ready within a year. And I firmly believe that. And if you feel like you can't do it, the best thing you can do is reach out to somebody who know what they're doing and get some help. Say, hey, that's what we are trained for. We're professionals because we got the training and tools to help you. Sometimes you can't do it by yourself. So that's what I believe. If you need help, ask for it. Don't be afraid. I'm always here for any questions. Yeah. Student loans does not affect your ability to buy a house. No, it does not. So thank you guys for tuning in. I had fun. I hope to do this. I don't know. Every week I'm going to. Great. Thank you so much. I like her page too, the Ashley the Realtor. Thank you, cousin Christy. Thank you, Shay. I hope to do a live every week so that I can it's going to be steps on buying a house. So the first step is credit. The next step is reaching out to a lender. The next step is getting pre-approval. So whether it's lives or pre-recorded videos, I will be every week dropping content on the home buying process. And then after I finish it's going to be like 8 weeks, I believe. I counted it out. An 8-week thing about purchasing a house, and then the next step is going to be selling the house. So I definitely want to educate you guys. Hit me up if you need anything. Thank you guys. I appreciate you guys for tuning in, and have a good night.